Crypto savings accounts, the risks and rewards. Putting your money into a crypto savings account, well, it's all the rage nowadays. The possibility of earning anywhere between 5 to 12% depending on the platform is almost too tempting to be true. In many ways, it might just be. In this video, I'll be speaking on the best platforms to save your cryptocurrency, as well as the risk involved with doing so, and why you should be careful. But let's start with introductions. I'm Derek West, host of Finance Squared, and stuff like this is right in our wheelhouse. Who might you be? Are you trying to straighten out your understanding of all things confusing about crypto and finances in general? Well, you found the right place. Subscribe to the channel for more clairvoyance on all things finance. And like this video if you get any value. And just say hi in the comments. It all does wonders to help the channel grow. But in terms of crypto savings accounts, they're all the rage. They offer you anywhere from 5 to 12% interest on the money you invest with them, which is much better than legacy savings accounts, which never rise out of the 2% APY range. Some online banks can get very competitive, but never really sniff the 5% APY range. And that's annual percentage yield for those of you not in the know. Is there a reason for that? Yes, there is. Probably the topic of a different video. But that doesn't mean you have to be stuck with those interest rates. There are other ways. But before we get into that, let's talk about risk in finance and life in general. Remember that the amount of risk that you take is directly correlated with the proportion of the reward that you receive. If you take average risks, you'll get average rewards. Isn't it curious how it's the people that take the plunge when they're not looking that have the most fun? It's also the case that they're the people that tend to end up severely injured or worse. But if you can understand your risks and calculate if it's worth it for you and your goals, and you take the plunge with eyes wide open, sure, you may still get burned or your parachute won't open or something like that, but at least you saw it coming. It's the same thing with finances. I say all that to say that risks with crypto savings accounts are greater than the risks with legacy savings accounts. So you are more likely to lose your principal than if you simply bought a CD or put your money into a high yield savings account. I'm sure you're wondering, but what kind of risks are there? Well, let's dive into that. The risks include a very real possibility of you losing your entire crypto nest egg that you invested in that crypto savings account, of course. Legacy finance banks have FDIC insurance, and a lot of the apps that will save your crypto, while they do have some form of it, it's not exactly what you're thinking. Even the ones that do, it's not easy to translate the crypto that you have invested into fiat dollars, particularly with currencies that are very volatile. Once it's converted into fiat dollars, it can then be insured against loss by the FDIC. So if the app that you're invested in has not taken this into consideration and they go belly up, then there goes your crypto. You could also lose control. You see, some of the banking apps that you put your crypto into for savings purposes require you to hand over your private keys to them so they can gain access to your funds to then loan them out. Now that should be a red flag to everybody. That's similar to giving up the password to your regular bank account and just trusting that the partner you're working with is working on the up and up. They might actually be, but putting that level of trust into someone else is a very risky proposition. And then of course there's red tape. If you're a regular crypto trader, putting portions of your crypto into a savings account might be a bad idea, since that crypto will then be locked down from being available to be traded. The reason for that is that crypto savings accounts have lots of stipulations on how much you can withdraw, when you can withdraw, and other red tape that prevents you from using your crypto when you need it the most. I think one of the more important risks we need to talk about is who is taking out these loans? This is something called counterparty risk. So imagine you put your money into a crypto savings account. The crypto savings account platform loans that money out to someone who will use it for whatever purposes. Building a crypto business, the usual stuff. Well, that sounds swell, right? I get to keep between 5 to 12% interest depending on the platform and the token that I invest, all to help someone else build the business of their dreams, right? How can you go wrong with that? Well, let's think about it. If you're getting interest of 5 to 12%, then the platform is likely charging interest rates of between 8 to 15% to the borrower, maybe more. I know these platforms claim to vet individuals on their worthiness of borrowing. Ideally, that would include the ability to pay back the principal and the interest. But how many borrowers will be able to pay 5 to 12% interest on the loans that they get? If they were solid investments, they would be getting loans at much lower interest rates. The same way if you pay your credit card bills on time, your credit score goes up and you get lower interest rates on your credit cards. If they were high-grade corporate citizens, they would be issuing bonds with much more reasonable repayment criteria. Those interest rates are starting to creep into the junk bond realm. There probably needs to be an entirely different video on that topic in order to keep this one nice and short, so subscribe if you haven't already, so you get it when it drops. But junk bonds have such high yields because they're at higher risks of defaulting, which indicates to me that there's a high risk of defaulting for the borrowers of the crypto funds. effectively leaving you holding the bag if and when those loans go belly up. But with all this in mind, I'm sure you're thinking to yourself, well, that's a lot of risk. Is this worth it at all? Well, keep in mind, with risk comes reward. And different accounts mitigate this risk in different ways, and they reward you in different ways as well. And different apps and platforms for loaning crypto have found ways to mitigate this risk. And let's talk about some of the best ones. Starting off with HoldNaut, spelled HODLNAUT. As some of us know, HODL is a popular way of indicating that you're going to hold your currency or asset of any kind, no matter what the financial situation is happening around you. A very admirable position to hold, by the way. Now, HoldNaut is a financial platform based out of Singapore that offers financial services to crypto enthusiasts. They offer one of the highest interest rates that I've seen for Bitcoin at 6.2% APY. That's annual percentage yield, folks, as compared to the 4.9% offered by BlockFi and the 6% offered by Nexo. We'll talk about both of those other competitors coming up. Nevertheless, they're able to offer those rates because they lend out your crypto to established and vetted financial institutions that are able to pay them, presumably. Now remember, the biggest risk of lending your crypto out at a 6% interest rate is counterparty risk. That is the risk of folks not being able to pay back the loans to the platform that is lending the money out. It's not stated at what rate that crypto is lent out at, but I can assure you it's higher than 6%. That's just a risk to keep in mind. And I would proceed with caution with these guys if I were to give out advice, which I don't do on this channel because it's for entertainment purposes only. Now that said, if you're willing to pay high interest, then you're either confident that your investment will pay off or you're desperate for an infusion of cash. There may be other reasons too, but those are the most likely. But with that risk comes a reward, and the reward that you get back from that account is 6.2% on Bitcoin. Not bad. BlockFi is next on our list, and it's probably among the most well-known crypto platforms on earth, along with Binance, Crypto.com, and Gemini. It is regulated by the US federal government and at the state level, 48 of the 50 states and territories. Putting your money into account with BlockFi, well, you can expect 4.9% on Bitcoin per year, 3.6% on Ethereum, 3.8% on Litecoin, 8.6% on US dollar coin, and other coins as well. Note that the dollar tethered coins earn you more than some of your favorite coins. Keep that in mind when thinking about investing. For example, instead of putting your savings into a bank, you could instead move your dollars over to a US dollar tethered account and earn about as much interest as you would if you put your money into an index fund. Yes, both ways of earning money have their risk of significant loss, but you're not putting your money under a mattress here. You're trying to help it to grow, which will always involve risk. The key is to know what the risks are and make smart decisions on which risks are worth it and which risks are not. Keep in mind, putting your money under a mattress seemingly has zero risks, but your house could burn down. Thieves could break into your domicile and steal your nest egg. Critters and creatures could eat it up, etc. There is no such thing as zero risk when it comes to investing. It's the same with investing in crypto savings accounts. Speaking of crypto savings accounts, there's Nexo. Nexo is another licensed and regulated platform that is insured by up to $100 million against theft with BitGo and is available in 40 plus fiat currencies and across over 200 jurisdictions worldwide. What makes this a very interesting proposition is that the interest rates on this that you can expect back on savings can be 10% per year, with the interest being paid out daily, allowing your savings to compound and grow rapidly. If you decide to pay out your account using the Nexo token, then you can expect to earn 12% APY if you put your savings in as US dollar. Crypto assets invested in the platform can bring up to 6% APY, whereas before they were as low as 4 to 5%. Still pretty good compared to traditional fiat banks, might I add. Now, of course, there are other platforms out there as well that will offer you great interest rates on your money, including Crypto.com, the Celsius Network, CoinRabbit, Binance, Gemini, etc. Each of them has a slightly different take on putting your savings into their platform to be loaned out, and they each have the same inherent risk that we talked about earlier. Just keep in mind that no investment of any kind is risk-free. Some are riskier than others, but if you want your money to grow, you'll need to take some calculated risk to achieve that goal. Let us know in the comments down below what your thoughts are on crypto savings accounts. Are they all you dreamed of and more? Are you concerned about their risk profile? Drop a comment with your thoughts. Like the video if you liked the video, and let us know as well if there's something we missed or you want us to cover more thoroughly. Be sure to subscribe if you like topics on personal finance and everything crypto, and be sure to share with your finance savvy friends, and even the ones who just don't have a clue. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take it easy, guys. We'll catch you in the next one.